Morgan Stanley, better than expected quarterly profit and revenue. Wealth management, that's really what Skinny and Matt do for us, Pete. That's what's happening up there with Morgan Stanley. Wealth management is killing it. They reported nearly 19% increase in earnings. And guess what? That's the first profit, or the first growth rather, in earnings that we've seen after 8 consecutive down quarters. So this is a turn for Morgan Stanley. No wonder on a soft day, it's up 4%.
It has not quite performed the way I'm sure a lot of people would like. But nonetheless, when you look at these particular numbers, and you already gave the backdrop for why it hasn't been really performing, when you look at what they were able to produce this time around, this go around, 18% up on those earnings, that's pretty substantial number. And it's about wealth management. It's about investment banking and all of that. Very, very similar to what we were talking about just yesterday about Goldman Sachs and some of the performance that they had. They are both in that category where they are making all kinds of money, and those margins tend to be a little bit better, I think, John, when you're talking about some of what they're getting, where they're getting the money from. It's a great quarter for Morgan Stanley. I know they're very proud of what they're doing. They got to continue to do this, but so far so good. 2024, the kickoff, this first quarter, very impressive what's going on the investment banking side.
Well, Morgan and Goldman both really reaping some of that reward. And it doesn't hurt that they've also bought the firm you and I used to own, Pete. They bought Trade Monster by basically buying E-Trade and incorporating that into some of these earnings in the very near future. So keep an eye on that. That's another reason that Morgan Stanley should be on your watch list and or on your buy list. But I can't tell you what to buy and sell, folks. I can tell you what Pete and I are doing.